Good morning, this is Sage and welcome to 𝐊𝐿𝐴 TV's Executive Corner, Expert Talks. Today's guest we have Mr. Rich Harvey, the CEO and founder of Property Buyers Agents, a multi-award winning real estate agency in Sydney. The property market has certainly come into focus the last 12 months, with many countries around the world noticing surges in property sales and increased sale prices. Today's guest will share some valuable insights on the momentum in the current property market cycle with the backdrop of record low interest rates brought on from the effects of the COVID-19 pandemic. So bringing you live today on the show, we have Mr. Rich Harvey, CEO, founder of Property Buyers Agents. Welcome to the show, Rich.
Thanks very much, Sage. Great to be with you.
Excellent. Well, having served as the former president of the REBAA and the chairman of the REI NSW, we are very keen to have your insights on the show. Let's get started. So buying a property is a big decision, whether it's for investment or to reside in, or a commercial property for a business. Could you explain the main differences for our viewers between a real estate agent, buyer's agent and a property manager, and which would you consider yourself to be, please?
I'm first and foremost a buyer's agent, Sage. So I started my business 20 years ago and I work exclusively on the buyer's side. So I'm quite different to a selling agent. A selling agent is there to represent the vendor and to list the property and sell the property. And that's their job to get the vendor the best price they can. My job as a buyer's agent is to help the client find the ideal property for their individual needs, to search, negotiate, evaluate, advise, and help them secure the best possible property. And a property manager, of course, they help to manage rental properties for landlords. So their role is to vet tenants, collect the rent, arrange maintenance. We also have a property management arm to our business as well. So we definitely help a range of investors. But buyer's agents have really only been around about 20 years. I was one of the first original buyer's agents in Sydney, but it's certainly grown in significant popularity over the last 2 decades.
Fantastic. Thanks so much for sharing that. So I noticed on your website that you have a very comprehensive list of services available for the people interested in looking at property in Sydney. And the Australian property prices have seen significant rises in the last 6 to 12 months. 5.9% was reported in the 3 months to July, and that was down from the peak of 7% in the 3 months to May 2021. Some analysts are expecting to see the market cycle continue with this type of trend. Do you believe that the property boom will reach $9 trillion by the end of the year though, Rich?
Well, according to CoreLogic figures, we're already at $8.6 trillion. So another 0.4 trillion is really only another 4.62%. So I definitely think we'll surpass that 9 trillion in the next 12 months. In fact, if you look at the numbers just in the last quarter, Sydney house prices rose 8.2%, Brisbane 5.2%, Adelaide 5.6%, Melbourne 4.6%, and Perth 2.1%. So that's only just over the last 3 months. Now, you can't times all those figures by 4 to get an annualised figure, but I think in my predictions, we're going to see a calendar increase this calendar year of around 15 to 20% in Sydney, and significant rises in all the other states. So there's plenty of what I call fuel left in the fire. This boom is certainly not over yet, Sage. It's definitely got a lot of legs left in it. And there's a number of factors that we're seeing driving this current property boom. I remember coming back to work in February this year thinking, yeah, it should be a good year, but wow, I didn't realise how white hot the market was going to get. So it's really been white hot since February. At the moment, it's red hot, and it's probably going to stay red hot for another 12 to 18 months. But if I can just list off some of the key factors that you've got driving this boom at the moment, obviously low interest rates is a critical factor. So people are able to borrow money at very, very cheap rates, historic lows. That's number one. Number two, there's pent-up demand from lockdowns. There's been a significant number of trends coming out of COVID. One is the flight to lifestyle. And secondly, the other one is what I call feathering the nest. So people aren't spending money on overseas holidays, but they're feathering their nest. They're wanting to upgrade their premises. They want a home office. They're going crazy with the kids at home and want separation and want a second living room. All of these trends are translating into much higher demand for the types of homes that we live in. And these homes need to be multifunctional. So we're definitely seeing those factors. The other big factor that's really driving this market is the lack of listings. So listing volumes are down 25% on their long-term average. So not only has demand shot the roof, but listings has gone way down. So that classic supply imbalance in supply and demand is creating a very toxic price increase.
That's very interesting to note that this trend has been occurring in many countries across the world, not just Sydney or Australia. And construction is also booming in Sydney at the moment, pushing through the lockdown restrictions. It seems that the investors, instead of the first home buyers, are gaining from this market cycle, however. Are you noticing, apart from the ones that you've just mentioned, any further trends in the types of property that are being listed and are selling quicker than others, perhaps?
Yeah, absolutely. So there's several trends. The first one I'd say is there's massive demand for freestanding homes. There's a shift away from higher density living into properties that are freestanding and have more space around them. So people are more scared of catching COVID, and they're happy to move to the regions or move into the outer suburbs or further away from the CBD. Typically, most people want it to be closer to the CBD, to be closer to work and reduce their commute. We're seeing that's now the opposite, because there's going to be a new hybrid system of working, and it might be 2 or 3 days in the office and the other 2 or 3 days working from home. And that demand for houses, we've seen that measured by days on market. So that's the number of days from when a property is listed to when it's actually sold. And in Sydney, the figures are it's now down to 26 days to sell a home on average, down from 40 days. And Melbourne, it's 30 days, which is now down from 38. So yeah, the big shift away from houses, toward houses from units, but it doesn't mean that units aren't in high demand either. Units are definitely still going up in value, but we're just seeing the rate of appreciation on units is less than what we're seeing on houses going forward. The other thing I'd say too, Sage, in terms of price segments in the market, if you look at, I guess, the 3 tiers of the market, the top end, the middle range, and then the bottom end, it's been that luxury end of the market that has seen unprecedented demand in the last 12 months. Come home, we've had 400,000 expats arrive back on our shores. We haven't had any migration into Australia, but that luxury and prestige property market has been absolutely booming. And then in the middle tier market, we've got the upgraders, as I call them. So you've got downsizers as well, but it's more of an upgrader trend. It's really fueling price demand. And then the lower price points, you've got the first home buyers and the investors competing in that sort of space. We're definitely seeing first home buyers struggling to be able to afford the market. They're relying on the bank of mum and dad to get in. But investors are becoming quite late to the party, but they're definitely now quite a strong force trying to get into the market and ride this wave for capital growth.
What an interesting space to work in, where there's that whole emotional factor in wanting to build a legacy in a family and also be part of this market-driven economics of property buying and selling. And I've noticed that the apartment or the unit prices, you mentioned that they are still in demand, and the prices are kind of being reduced on websites like realestate.com. The asking price is sometimes even under $700,000 for units in the city. So asking price and sale price is interesting to investigate. Can you shed any light on how much more than the asking price buyers should expect to pay?
Well, this is the continual quandary, or conundrum I call it, that buyers face, and it's a bit of a cat and mouse game. Unfortunately, underquoting is still rampant. The Fair Trading Department did try to outlaw underquoting and overquoting, but still agents are pretty sneaky about the way they do it. So they have to put a price guide. They can list a property without a price guide, but when they do quote it, it has to be within 10% of the range that they've written on their agency agreement. So for example, the price might be 1.9 million, but there's no way the vendor will ever accept 1.9, and it's more likely going to sell for 2.2 or 2.3. So you can't sort of put a hard and fast rule of thumb on every price that's listed on the market. It's going to be dependent very much on the factors of the property, its location, the number of bedrooms, etc. But typically what we've seen in the market is anywhere from 5% to 15 or even 20% above the guide. And that's just because there's been huge buyer demand. But it certainly doesn't make it easy for the poor buyer out there that thinks, oh gosh, I've got a chance of buying this, as you say, $700,000 unit, and then they go to auction and watch it sail past them at 900 or 950 or even $1 million. So it's very, very frustrating out there for the buyer. So all I can say is that you really need to look at the most recent and relevant comparable sales, literally within the last 6 weeks. Sales that are 3 months or older are typically irrelevant. You have to look at sales that are very, very recent and look at all of the factors and ask lots of questions and do some really deep dive into due diligence to identify what the price is worth.
Thank you so much for sharing that. That was definitely a piece of knowledge that I could take away with myself, and I'm sure the viewers feel the same way. However, we can't finish this discussion without mentioning your role in Buying Blind, the reality show by Channel 9 Now. So Buying Blind literally, though, is probably the worst thing that anyone could do, especially after what you've said about having to find the comparable properties sold within the last 6 weeks to help estimate what your purchase might go for. But an interesting social experiment. Did your participation in the show change the way that you approach selling property at all?
I actually don't sell property, I buy property, but the show was a really interesting exercise. I was pretty hesitant, to be honest, to go on it. They approached me and I kind of thought, oh, I'm not sure it's going to do my reputation or any good, but look, all of my team supported me going on it, and I've got a great team behind me, so it took a lot of time. But the premise of the show was that there were 6 couples trying to get into the property market and had really struggled, and they just couldn't find the right sort of property. And they volunteered to go on, and I had to sign them up under a buyer's agency agreement. They had to sign a power of attorney for me to spend their money, give me their brief, and then basically the next time I saw them, I'm giving them the house to their keys to their house. So it was a huge exercise in trust, but it all ended very, very well. None ended in tears. The show obviously created a lot of jeopardy and you know, what's the word for it, suspense as to whether I was actually going to find them the right property. But it was a really great exercise. I mean, all the couples had to go on a bit of a journey, and I had to go on the journey with them and encourage them and say, look, I'm going to find you something. I had to be patient. I even had to tell the producers to be patient. I wasn't going to ever put any of those contestants or clients into properties that didn't fit their brief. And I think that's what a lot of people have got to understand when they use a buyer's agent, that it's about getting to the same page and understanding the brief, understanding the needs and future-proofing the needs of what you're going to buy that's going to suit you for the long term. So yeah, it was a great exercise. Look, I guess what it did do for me was create even more empathy for my clients and to get inside their heads as to what they need. And some people don't understand what they really want until they see it. So for all the contestants on the show, they had to have a huge amount of trust to trust me to get them the right thing. But it was a great bit of exercise, and the reveal day was fantastic. It was so much fun taking the blindfolds off them and showing them their houses. I really quite enjoyed the experience, and I've got to say, all of those people, Sage, have made a lot of money on those houses now that they're bought too.
I can imagine. Wow, what a great experience. And definitely character building, being put out of your comfort zone like that for those participants in the show. Well, that's all the time we have for today, Rich. Thank you so much for making time for us.
It's a pleasure. Great to be with you, Sage. Thanks again.
Great. And audience, thank you so much for watching. If you've just joined us, we had a very interesting discussion with Mr. Rich Harvey, the CEO, founder of Property Buyer's Agent. And if you'd like to watch the full interview to catch his valuable insights, please head to the YouTube channel sometime today, 𝐊𝐿𝐴𝐚 Media. And as we say, stay apprised and invest wise with 𝐊𝐿𝐴𝐚.